Hey everyone, welcome back to Corporate Decoder. GoDaddy just filed their latest 8K and I am seeing a clear shift in their incentive plans. Quick note, this is not financial advice, just my take on public filings for educational purposes. Today's filing details some important shareholder votes, including the approval of an updated stock incentive plan and the reappointment of their auditor. Let's dive into what happened at their annual meeting on the 3rd of June 2026. The big news here is the approval of the GoDaddy Inc. amended and restated 2024 Omnibus Incentive Plan. Essentially, they are increasing the number of shares available for their employee and executive compensation programs. This means they are planning to issue more stock to reward key people, which a lot of companies do to attract and retain talent. The plan was already approved by the board but needed the final nod from shareholders, which they got. This amended plan replaces the 2024 version, and the details were previously laid out in their proxy statement back in April. A key takeaway is the increase of 3116000 shares under this plan. Now let's look at the director elections. 9 directors were up for re-election, and all of them were duly elected to serve until the 2027 annual meeting. We have Aman Bhutani, Harold Chen, Caroline Donahue, Mark Garrett, Brian Sharples, Graham Smith, Leah Sweet, Srini Talapragada, and Sigil Zami. Looking at the vote counts, most directors received a very high percentage of 4 votes, well over 100 million. For example, Sigil Zami saw an overwhelming 110449618 for votes. However, it is worth noting the broken non-votes, which consistently came in at 7411243 across all nominees. This indicates shares held by brokers that were not voted by the beneficial owners. Next up is the advisory vote on executive compensation. This is often called a say on pay vote. Shareholders approved the compensation for GoDaddy's named executive officers. Out of over 100 million votes cast, the 4 votes were 1019622417. This suggests shareholders are generally comfortable with how the company is compensating its top brass, though there were still over 8.4 million against votes. Moving on to the auditors, the shareholders ratified the appointment of Ernst & Young LLP as the independent registered public accounting firm for the year ending the 31st of December 2026. This is a pretty standard procedure, and it was met with strong approval, with 1111168218 votes in favour. This is a crucial vote of confidence in the company's financial reporting and oversight. And circling back to that incentive plan, the approval of the GoDaddy Inc. amended and restated 2024 Omnibus Incentive Plan was also overwhelmingly supported by shareholders. With 105669337 for votes, the company has the green light to move forward with granting additional equity awards. This is a strategic move to align employee interests with those of shareholders, especially given GoDaddy's market position. As of early June 2026, GoDaddy has a market cap of around $10.8 billion, with its stock trading at about $80.7. Even though there have been some recent headlines suggesting the stock might be undervalued according to some metrics, this filing shows continued strategic investment in their human capital. The actual document for the GoDaddy Inc. amended and restated 2024 Omnibus Incentive Plan is included as an exhibit. This is where you find all the nitty-gritty details about how the plan works, the types of awards that can be granted, and the specific terms and conditions. It is quite a lengthy document, as you can imagine. Looking at the overall picture, GoDaddy is clearly focused on rewarding its key employees and executives to drive future growth. The strong support for the director re-elections and the executive compensation plan indicates a level of trust from the shareholders. The increased share pool for the incentive plan is a signal that the company is looking to incentivize performance and growth, which is a positive sign in a competitive tech landscape. One potential area to keep an eye on with these types of incentive plans is dilution. While it is a necessary tool for attracting talent, too much dilution can negatively impact existing shareholders. However, given the company's market cap and the relatively modest increase in shares compared to the total outstanding, it seems like a calculated move. My biggest concern is always how effectively these incentive plans translate into tangible business results and shareholder value over the long term. What I am actually looking for is continued innovation and market leadership from GoDaddy. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video and subscribe for more. Join our Discord community in the description.